the single market will not be enough to carry the burdens of debt reduction, deleveraging, the aging population, all those things we discussed earlier. That said, there is significant value to be released within the single market. So where else can we go? We talked just now about consumers driving the force of free trade, and I mentioned the words hitching Europe to the wagon of emerging markets growth. India represents 2% of EU exports, Brazil about the same. We will see a role reversal, we expect, over the coming decade. Emerging market consumption by 2020, we forecast, will represent about three-quarters of incremental consumption. Very significant, and so we need to make sure that our businesses, our companies, and our connections with the emerging markets, with the consumers living in Mumbai, in Shanghai, Sao Paulo, and so on, remain intact. So that's the second one. A third one is remaining connected to intra-EM flows. They represented something like 6% of global GDP in 1995. 15 years later, they were at about 13% and growing very fast. Brazil's trade with Asia has tripled over the last 10 years. To intermediate those flows is very important. Companies like Adidas, over 50% of their business is generated in those markets, another source of growth. Another one is potentially completing the national reform programs to release value. It's striking how within the European Union, levels of higher education, as between the Nordic and Portugal, for example, are vastly different. The amount of internet penetration, as between the Netherlands and Italy, is 90% versus 50%, and so on. So that's another element. A further one, which Olli Rehn, I think, has mentioned, and which Bob Zoellick mentioned earlier this week, is to provide some supply-side support to the growth agenda. What would be the value of 10 billion euros in the EIB of capital that could be leveraged to support the growth agenda relative to 10 billion of euros in the firewall? And finally, a straw man, which is to reduce the inefficiencies in terms of trade between the United States and the European Union through some form of free trade agreement. Those would be some incremental things which I think need to be looked at in parallel, because the single market, although it has significant upside, won't be enough.